Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views.
Hey, good morning and happy New Year. Hope everybody had a good restful break, good time off, holidays, friends, family. We sure did, but back at it now. And we've got an update, really interesting update across the board for almost everything out there. Modest gains, but you got the dollar strength there. Equity futures are up. Gold, copper, bonds, junk, and investment grade all did a bit this morning. So somewhat interesting. We're looking here at the S&P 500 chart. You see that well intact downtrend continuing in from late last year. We all know that story all too well. I want to show you the triple Qs again real quick. Showed you this last week in terms of that support line down there. And that goes back a long ways. This is 15 years. So that is a pretty important level. We are holding it thus far, but that's something to keep an eye on for sure. So Fed member Dudley was out, I think over the weekend, highlighting the need to slow the job market in order to get wage inflation in line with the Fed's long-term inflation target of 2%. That's going to be a big job because we're nowhere near that 2% equivalent on a wage basis, in my opinion. But this is the whole big deal, though. It's tightness in the labor market that is really driving this services component of CPI and PCE, which continue to come in a little bit on the hot side and show some real resiliency in terms of price. So for us, the big question is, will the Fed hold steadfast with another, call it 75 or 100 bip hike in the face of weakening macro conditions in order to crush inflation, or will they blink? And many think they are going to blink. Many think that the Fed's going to, be faced looking at this macro weakness continuing, potentially getting worse, and they're going to stop the hiking and potentially cut at some point in 23. We are leaning towards the camp of they'll go forward with another 50, 75, and we're thinking they'll probably pause and just hopefully let the drivers of slowing growth do their work when it comes to inflation. Wall Street economists starting to put a lot of earnest cuts on 2023 S&P 500 earnings forecasts. You'll recall an exercise we did way back in the fall. We literally just took average percentage drops during recession, average multiples of S&P 500, and got a target of around 3,000 for the S&P. So that's kind of where we're having the back of our mind is potential downside risk. So something to keep in mind as we go forward in 2023. One thing I wanted to show you real quick, I'm going to bring in another chart, is we've got a somewhat interesting situation in the dollar. So this is my DeMark work. This is some technical work that we subscribe to. I'm a fan of Tom DeMark's exhaustion sequencing that he does. So if we look at, here's the dollar, the UUP, we're looking there, and this thing is showing a 13, which is selling exhaustion for a buy setup. So we could have a little bit of a relief rally in the dollar here over the near term. The other thing that's interesting, if we look at intermediate term bonds, this is a Schwab ETF, SCHR is what I'm pulling up right now. And that's showing a 9, which is another buy signal right there. So that could have a little bit of a run as well. So you could get a little strength in bonds and the dollar as well. So lower yield, higher dollar, which would be a little, inverse what we saw last year, but see what happens. That is it. Have an awesome Tuesday, and we'll be back to you tomorrow.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital, LLC, as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital, LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.